Welcome to the Asian Connection Mortgage Podcast, where we connect Asian Canadians together to talk about anything related to real estate, mortgages, and finances, based out of Vancouver. Our host is John Lee, mortgage broker with Arise Mortgage. Grab a bubble tea and enjoy the episode.
Hello everyone, it's John Lee here, and welcome to another episode of the Asian Connection Mortgage Podcast. So I was chatting with my marketing team, and I was like, "Oh, give me some ideas. What should I talk about?" And like, "Oh, well, this podcast is close to Halloween, so maybe you could talk about some spooky mortgage news or something." So I was thinking, I was like, "Oh, there is a very spooky mortgage news that's coming up." So I want to talk about something that's quite scary for real estate investors because there's big changes from OSFI, which is it's known as the Office of the Superintendent of Financial Institutions. It's a tongue twister. Basically, they are a government institutions where their only mandate is to protect the banking industry. So they're making big changes. It's coming on November 1st, 2025. And the news is it's going to make it harder to get a mortgage on rental properties. So what's changing? Let me share with you. Basically, OSFI is tightening rules for mortgages on rental properties. And like I said, it's going to roll out November 1st, 2025, very likely January 1st, 2026, depending on the bank's fiscal year end. They also need time just to implement because honestly, not many people know what the changes are specifically. It's not so much in writing, and maybe it is, but the banks also need to update their system so that it's consistent with the policies. So maybe some banks will apply the new rules right away, some may wait, but in the end, it's just going to reshape how banks lend to anyone buying income properties. So here's what's different. So if you own multiple properties, banks can't use the same income to qualify you for each new mortgage. So, for example, if your salary was used to get your first rental property, you can't recycle that same portion of the salary for property number two or three. So each mortgage now needs to stand on its own. Income used up on one property won't count again for others. Once these rules are fully enforced through 2026, banks have to treat mortgages for rental properties as income producing residential real estate. So once it's in that category, it has tighter restrictions, higher risk, and higher interest rates. So these are the three things. I can't use the same salary for multiple properties. Number two, each property has rental income, and that income can only be used for that property. And number three, because banks need to set aside more funds for these type of mortgages, therefore rates may be higher on rental properties. So why is OSFI doing all this? Well, like I said, their mandate is to protect the banking system, and they see rental properties as riskier for the banking system. So investors right now, they make up about 25 to 30% of Canada's property market. And some cities like Toronto and Vancouver see higher numbers, probably like 40% in condos, which is uh, understandable because there's so many pre-sales being built and many of them are purchased by investors. And when too many people stretch their incomes across multiple investment mortgages, some small mistake or some shift in the economy will cause a snowball effect. And if the economy doesn't really do well, all of these rental mortgages could go bad really quickly. And you may be seeing some of that already. There's quite a lot of supply in the condos right now because lots of investors, they're like, well, I can't seem to rent it out, or I'm not cash flowing. I just want to get rid of it. But then they can't. It's just sitting there empty. and it might get sold, but maybe they lose money. I'm not sure. But there's just a lot of options out there. So yeah, so Austria just wants to make sure that investors are not over leveraging, uh, in particular in rental properties. So they just want to make sure each mortgage is safe on its own and for banks to hold more capital against riskier loans. And that's supposed to keep the overall financial system stable, even if it puts the squeeze on small investors. So here's a little bit more details on how this new works will make borrowing harder. So before these changes, you could often qualify for multiple mortgages using the same job income or the same rental income stream over and over again. But now, when you apply for a new rental property loan, banks can't double count income. So if you can't double count income, that means you have less income to qualify, which also means you can't borrow as much. Now, um, we also want to make sure that banks are not over leveraging when it comes to refinancing as well, because that's a very typical investment strategy where you don't sell. Since once you sell, you have to pay capital gains tax. So the trick is, well, your property is going to go up, then you refinance, get the equity, use that equity, and put it as a down payment on the next one, and you borrow more, and then rinse, recycle, and so on over and over again, and you end up having like a big portfolio of rental properties. So now OSFI knows this, that people do this. It has worked years ago, but now they're trying to put a stop to it. So, but honestly, like they have announced it, but in terms of how they're going to implement, I really don't know. So, like some questions I'm asking is like, okay, well, if someone goes to one bank to get uh, a mortgage for investment property. Then they go to another bank for another investment property. So how would they know what portion of the salary was used on the first bank? Like if the client went to the same bank, I get it. Like they have all the information and they see how they were able to underwrite it. But if it's separate banks, banks aren't supposed to communicate with each other because of privacy reasons. So that I'm not too sure how they're going to implement. And then other thing I'm seeing is that okay, well, how about renewals? So banks are like, oh, this is rental property. Ah, I know it. You're going to play hardball and be like, oh, I'm going to take my mortgage to another bank. You're like, well, it's a lot tougher to apply and be approved. So likely you're gonna be stuck with us, and too bad. We're just going to offer you a higher rate. If you don't like it, no, then switch. But oh, wait, you can't get qualified. You'll have to take the higher rate. So it does cause a little bit of yeah, less competition when it comes to renewals. Um, but again, that's it's still a bit too early to tell, so we'll see. So let's take a look at the bigger picture and why is this a big deal? So this is a big deal because um, this isn't just about a few investors. There's a lot of investors in the Canadian housing market. Like I said, it could be like, yeah, 41% of condos are rentals, and if a big group of investors can't afford to buy, that just means there's going to be less demand for investment properties. So if you are holding an investment property, the likely buyer will be owner occupied, say like a one bedroom or two bedroom. But then there's so many of them, and there aren't that many people who are purchasing or can afford a place to live. There's that, and then there's also fewer new rental units. So that will cause um, just people to own properties. And if you're renting, there's going to be less rentals. And there's just going to be more downward pressure on prices. Like if fewer people are buying for the purpose of rentals or investment, uh, yeah, there's prices are going to go down. So if you're trying to build a portfolio, first off, do you really want to continue to build your portfolio? Like if the government is saying that there's an issue in the uh, rental market for investment properties, that's probably a good red flag. And maybe you might want to consider another asset class to invest in. But say you're adamant, you're like, okay, uh, this is a good time, buy low, sell high, right? So buy low, you gotta have a bigger down payment. It's because maybe you won't be able to qualify as much. You need to have a stronger income, or maybe you need to get a few more partners in with you, so then you can roll more together. So what can you do? If you're an investor, yeah, just get your paperwork in order. You might want to buy another rental before all these changes happen. You can explore maybe things like credit unions, because credit unions aren't regulated by OSFI, and hopefully they'll be able to offer some more flexible rules. But also expect, now maybe you may be able to borrow more, but also likely it'll be higher rates. And yeah, do if you're renewing or refinancing soon, make sure you talk to your bank or broker early. Don't wait the last minute because if you do need to apply, you want to apply now in the current lending guidelines. But if you're also just starting, yeah, just know that rental mortgages will need more planning and make sure you crunch the numbers. It's gotta be more conservative. Don't expect to use the same income on multiple properties, so you're gonna be borrowing less, higher down payment. You might want to talk to a few more partners and partner up, so then you guys can combine your income together, so then you can borrow more. And yeah, but in the end, it's really up to you. Like I said, if for me, I'm not really looking into rental properties anymore. Like I don't want to become a landlord in this environment. And government also sees lots of rentals being built um, because CMHC, they have a new lending program specifically for rental purpose buildings, and many developers are using it to build more rental properties. So you'll notice that there's more development, and the sign says this is not for sale, it's only for rentals. So if you are going to have a condo and you're trying to rent it out, well, there's gonna be a lot more competition because there aren't new buildings that are being built for sale, but more buildings being built for rentals. So here are my final thoughts. So OSFI simply just wants to protect the banks. They honestly do not care about consumers, don't care about investors. They just want to make sure that banks are sound, they're safe. They don't want a 2008 financial crisis like that happened in the States. Um, so yeah, they're just making sure they want to do things very conservatively to remove any risk for banks in the rental market. So that just means harder rules for investors. And yes, there's gonna be a slowdown for property investments. And in the short term, there's going to be less rental supply. And if you are an investor, also need to think about diversifying. So you can look into buying rental properties, but why? Consider other asset classes. That's less of a headache. Maybe stocks, mutual funds, segregated funds. You can also invest in whole life insurance as well. There's so many other asset classes outside of real estate, and I get it because in Vancouver, Toronto, real estate has been doing so well from like the 90s. all the way, even up to like after COVID. But now things are softening. We're in a recession. There's a lot of condos being built, lots of supply. And yeah, if you can't find a renter, you have to keep up with the payments and the strata fees. And if you're trying to sell and you can't, you're stuck with the property. It's not it's not a good feeling. So I'm gonna end it off. Happy Halloween. I hope this news didn't spook you too much, but it's definitely going to be a big change in our industry. And if you have more questions about your own rental mortgage, refinancing, or how all these new rules affect you, contact me. All my information is in the show notes. Love to chat with you. So take care, stay safe, happy Halloween, and we'll see you in the next episode.
Thank you for tuning in. If you enjoyed today's episode, please consider giving us a review and subscribing to our podcast on your favorite platform. Thank you for listening, and we'll see you next time on the